Hello, traders. It is Wednesday evening, July 1st, and it is time for the weekly swing trading video. Let's start with the market, see what's going on here. We've got a really nice breakout through a downward sloping trend line right here. You can see how the SPY closed above that 310 level. I like that. We've had two tests of the 200-day moving average, but they haven't been one and done tests. They've been multiple tests. One, two, three, rally up, market comes back down. One, two, three, four tests of that 200-day moving average. I think that support is going to hold. We've got a pretty strong bid to the market right now as we head into earnings season. That's going to kick off in about 2 weeks or so, which incidentally, as earnings season starts to roll around, we do have a search that I really like using, and I've got a candidate tonight that we're going to be taking a look at for our bullish put spreads this week, which incidentally, not a lot of market direction right here. You can see how the market in the last month really hasn't done much. Prices are consolidating right here. We saw this rally above the upper end of the channel, and that told us that we were going to see some profit taking. We did. Tested a major moving average, tested it again. Buyers are there. They want to be long stocks heading into earnings season, especially the mega cap tech stocks that have been leading the charge higher. Now, on a macro basis, if I take a look at what's going on, I think we're going to head sideways. I have a upward bias for the next month or so as earnings season starts to unfold. And let me tell you what I like about the market currently. The ADP report today was actually quite good. The number was in line with expectations for the month of June. However, the month of May was revised dramatically higher from a job loss in the neighborhood of 2.7 million to actual gains of about 3 million. That is a huge adjustment, and it's consistent with what we saw last month for the unemployment report, which, by the way, unemployment report is going to be posted tomorrow. I'm expecting a decent number. Even if the number comes out bad, let's first cover the unemployment report tomorrow. I think it's going to be a good number because of how the ADP report has been coming out. But let's say that the jobs number tomorrow comes out a little bit soft. Doesn't really matter because all that's going to do is prompt the Fed to do more quantitative easing, and it's going to force politicians to enact more stimulus, which, by the way, today, the government $600 per week additional subsidy for unemployment benefits was going to run out. It's been extended until August 8th. That's good news. So the PPP, Paycheck Protection Program, is continuing to get extended. If the economy struggles at all, we're going to see additional action on the part of fiscal stimulus and quantitative easing. And we can expect it to struggle a little bit because we're seeing coronavirus cases increase across the country. So we've got four states that are actually moving backwards in terms of their phases, and they account for about 30% of the GDP in the US. So it's a significant number. And that includes Texas, Florida, Arizona. And we've got other states who are halting any kind of reopening, and they're not going from phase 3 to phase 4. If you put both of those groups together, it's about 40% of GDP. What that tells me is that we could start to see some problems in August because the coronavirus has been very, very stubborn. We've also seen that in China, you've heard this in my recent videos, they had a really big festival. So this was the Dragon Boat Festival. It's a big deal in China. The attendance was down 49% year over year, and the revenues are down 69%. I see that as very significant because they're 2 months ahead of us in terms of the recovery, and people are not going out and embracing the recovery. They're still very, very cautious. And that gives us an idea of what we might possibly see here in the course of the next 2 months. There's also another type of swine flu that's starting to surface in China. So who knows? Maybe we see additional problems there. The longer this recovery drags on, the worse it's going to be for the economy, and the greater the likelihood that we could start to see some credit problems. So we want to get through this very quickly, but that's why I feel that over the course of the next month, I think we have a nice chance for the market to rally higher. But as we start getting further into August, I think we start to run into problems. Politicians head out to recess, nothing happens, investors start to get a little bit nervous. August and September are typically negative months for the market, so I think everybody starts to get a little bit nervous. Right now, we've got the November elections kind of coming into play. Joe Biden is leading in the polls. That also has some investors nervous because he's talking about repealing the tax cuts. So we've got a number of factors that are going to come into play in August and September. That's not going to impact us right now. Right now, I follow price and I follow volume, and it tells me that the coast is clear for the next 2 or 3 weeks. So we're going to continue to stay inside of that 3-week window, and we're going to try and sell out of the money bullish put spreads on strong stocks below technical support. We're going to take advantage of that accelerated time premium decay, and we're going to continue to generate income while we wait for clarity. So I like the fact that we had this little bit of a sell-off here. I believe this was largely due to the massive rally. Look at this rally that we've had during the last quarter. We just finished one of the strongest quarters ever because of this rebound. Many funds have to have a fixed percentage in equities and a fixed percentage in bonds. After you get a big rally like this, the equity percentage of your portfolio goes up dramatically. And so what do you have to do to rebalance it? You've got to sell some equities and you have to buy some bonds. Well, we saw that influence right here on that long red candle, and that was last Friday. And for those of you who've been watching my videos on a daily basis, I'd mentioned, I think this is going to be the last bit of selling that we have. And sure enough, end of month, beginning of the month fund buying came in. We had a nice little bounce off the 200-day moving average on Monday, follow through yesterday, follow through today. So now I think we get into a mode to where we have some optimism heading into earnings season. So that's what we're going to try and take advantage of right now. Let's take a look at our trades that we had from last week. And here you can see these are our current positions. We have less risk exposure now than we've had in months, and that's good. We're playing it very cautiously. We're focusing a little bit more on day trading. On the swing trading side, we have little risk exposure, and so you can see here last week from the trades that we were able to enter, we put on this Microsoft trade that was a beauty. We're short the 187.50 puts, long the 185 puts. We're able to get 50 cents for that spread. It's currently no bid offered at 6 cents, so really working out well. You could even buy that back and close it down because we've almost milked everything that we can out of that. So you might consider doing that tomorrow. Now we've got this Baidu trade that we're never able to get off last week for a 20-cent credit. I sent out a video Sunday night. I said, I think that you might as well cancel the orders from last week. If we weren't filled, we don't want to be filled at this stage. We did get into a CHWY trade, and we sold the $46 put and we bought the $45 put for a 20-cent credit. We still have that trade on. The stock dipped below $46. Am I worried about it? No. Part of that sell-off was related to the market pulling back and to the portfolio adjustments that were being made. So it had to weather that market weakness, but now that we've had a couple of decent days in the market, we've seen the stock bounce. I'm going to bring up that chart in a little bit, and we'll be taking a look at that. DLTR was another trade that we tried to get off last week. Couldn't get that trade done. So again, this is one that was canceled. So you'll see me remove these two trades from the staged order entry screen. Microsoft in great shape. Again, I would try and maybe reel that in for a couple of pennies tomorrow if you can. And let's take a look at what we've got on deck for this week. We also had the Walmart trade that we put on. That was a special video that I sent out. We got an 18-cent credit for that. There we were selling the July 2nd. They expire tomorrow. We were selling the 117 puts and we were buying the 116 puts. And we did that for an 18-cent credit. That was an error right there. Actually, it should have been a higher price than that. So that expires tomorrow. That's a really nice trade. We also, in a special video that I put out, I suggested selling the BZUN July 17 puts, naked put right. Those are the $35 puts. We're looking for a 70-cent credit on that, and we were able to get actually much better than that because the stock pulled back the Monday after the video, and I think we were probably able to sell it closer to 90 cents or so. Those options are 45 cents bid, offered at 50 cents, so that's in nice shape. And then we also had a BILI put that we were looking to sell for 40 cents. Again, there we were able to sell that for, I believe, probably 55, 60 cents at least, because that stock also pulled back the morning that you would have had the first opportunity to get that trade off, and that's currently 8 cents bid, offered at 11 cents. I'd suggest to you, you can reel that in for pennies. Do it. We've got a nice gain in that one. If you want to release some margin, if you want to hang on to it, you can. I'm going to leave it on. Right now, I don't see any imminent danger in the stock. So we just want to take advantage of time premium decay. We're in pre-holiday mode right now. We're going to have a very lackluster day tomorrow. Once that unemployment report comes out, we'll probably be busy for the first hour or two, and then you're going to see the volume really wane and will flatline as traders start to head out for vacation. Got a 3-day weekend coming up. That means that Monday we're going to have a holiday hangover, probably be a non-event type of day. So now we've taken the holiday out, we've taken the day before and the day after. When you get these summer holidays, it takes another 2 days with it. So effectively, it's like taking 3 trading days right out of the picture. If you're a premium buyer, that's no good. If you're a premium seller, it's wonderful because the market tends to be very, very quiet during those time frames. So I would suggest, if you're happy, you don't need to release the margin, leave the B's on trade on, BILI, leave that on. Walmart's going to expire tomorrow, so we'll be left with only a handful of positions. These two will come off. All we'll really have left is we'll have the Microsoft trade that's toast. You can reel that in for next to nothing. And the only one that we really have to take a look at is this CHWY. I still like that position. Take a look at that chart right now. We're going to bring that up. CHWY, the reason that we got into that trade was it had really decent support here at the $46 level. The stock broke out, tested that support once, twice, and now we're getting back above it. That is a nice support level at $46. The stock has had a nice upward trend line, way above the major moving averages. I think for those of you who might be watching this video on Friday, if you come in next week and you see that CHWY is starting to bounce off of this $46 support level, I would suggest maybe taking a look at a July 17 put spread using the 46 strike and the 45 strike. If you can get 20 cents for it, I like it. I think that's a really decent spread to put on. Even the July 10 might be there because we're right at the money. In fact, if I put this screen back up, I'm pretty sure that July 10 bullish put spread will still be there because it is 10 cents bid offered at 70 cents. You should be able to get that done for a 20-cent credit. And if I can do that, get a 20-cent credit on a dollar wide bullish put spread, that is a 25% return if it expires worthless. And I think you're going to see CHWY start to recover a little bit. And again, I'll just highlight that. That would be selling the CHWY July 10, $46 put, buying a $45 put, doing that for a 20-cent credit. So I like that trade still. I think we're going to be in good shape. Don't panic on this one. Yes, we went in the money. We're in the money for a couple of days, but that was more market related than anything. You can see this market sell off since we put that trade on. So it was market related selling, not weakness in the overall stock. Now that the market is starting to recover, and now that I feel that we're going to see some follow through buying the next few days, I think that this stock is going to be able to recover nicely, and those options will finish out of the money. If we need to make an adjustment, I'm going to send you an email and you'll know exactly what those instructions are. And until then, we're going to continue to maintain this position. I will, of course, be updating it next Wednesday night when I do my weekly swing trading video. We're going to stay the course on this one. I like it. So that's it for our open positions. It's time for us to take a look at what we're going to be doing with our new positions. And I'm going to start showing you some of the trades that I've got for you. And the first one on deck is I'm going to put up BIDU. And you might recognize that symbol from last week because we were trying to get a BIDU spread done and we weren't able to. So I like this breakout right in here. And you can see that that was resistance once, twice, three times through. Okay, so now that we're through that price point right there at the 117 level, now that becomes support. And you can see long tails under body. Yes, the stock goes down, it probes for support, boom, probe, boom, probe, boom. So these long tails under body tell me that there is support for the stock. It's just drifting down, and now it's going to be testing this breakout right in here, and it should find some decent support in there. If not, we still have the 200-day moving average that we can lean on. So there is some underlying strength in the stock. That's why it gapped higher. I want to try and get a trade done on this, and I'm going to be looking to sell a July 17 bullish put spread. So we're going to click on July 17. We're going to scroll down and we're going to go down as far as we can. We want to be below that 200-day moving average to increase our probability of success. I'm going to click on the bid of the 113 strike price, and I'm going to click on the ask of the 110 strike price. You can see that there is $3 between the strike prices. So on a $3 spread, I'm going to want to get a pretty decent credit for this, but realize that these options expire next week. So I've already told you, they expire on July 17th. So I'm going to want to get a pretty decent credit for this, and I'm going to be looking to get somewhere in the neighborhood of 50 cents for this spread. So you can see that right now the spread is 22 cents bid, offered at 54 cents. Well, I'd like to try and put that in, and I'd like to get a 50-cent credit for that. So it's a little bit less than I would normally take. Usually if I've got a 2.5 point spread, I'm going to want a 50-cent credit on it. In this case, we've got $3 between the strike prices. I'm happy with a 50-cent credit. So let's go back and take a look at this trade one more time. So we're below that 114 strike price right in here. We don't have earnings coming up because those don't come out until August 17th. And right now, this is a very important point. When you're looking to put these spreads on, you must try and find stocks that are going to be reporting earnings after those options expire. So we do not want to hold these spreads over earnings. And the other thing that I'll tell you is that if you're long premium and you're a premium buyer, you want those options to span the earnings announcement because they're going to retain their implied volatility much better because there's always that surprise component for the earnings announcement. So when I'm long premium, I like to be long options that expire after the earnings announcement. When I'm short premium, I want to be short options that expire before that earnings announcement. That way they're expired and I don't have to worry about buying them back in, and I don't have the risk of holding them over the number. So that's how it works. You can hover over the E, and in this case you can see on BIDU that earnings announcement is not due until August 17th. So lots of time. So what I want to do is I want to get below that 200-day moving average. I want to sell the 113 puts. I want to buy the 110 puts. I want to do that for a 50-cent credit. And I want to do that trade that expires on July 17th expiration. So that is our first trade for the week. So the next one that I want to take a look at is TXN. And one of the difficulties that I had this week was you've got stocks that have gone absolutely parabolic. I mean, they are just off the charts crazy. We're seeing a ton of money being pushed into these mega cap tech stocks, and they've gone parabolic. I think they're way overextended. Today we had a big run in SQ that was really tempting. I mean, you had this nice upward sloping channel right here. Well, we know that when you have an upward sloping tight channel like that and you poke through the upper end of that channel, that you're probably going to see some profit taking. Well, in this particular case, you see any kind of profit taking, you could be in trouble by selling options that are right at that breakout. Say if you sold a 104, 103 bullish put spread, you could be in trouble right away if the stock gets overextended and pulls back sharply on any kind of market dip. I'm going to take a look at a few others. Let's see, we've had Shop. Look at that baby go. Incredible. You could take a look at, oh my gosh, Amazon. That is also getting a little bit overextended. I like Amazon. I think it's a great stock. I mean, yes, I could have looked at a upward sloping trend line here and sold something below this candle right here, but I want to stick with something that's been relatively range bound, that doesn't have a whole lot of parabolic action to it right now. eBay is on this list right here. eBay has gone crazy. You can see how that's starting to really get very, very extended. So when I look for stocks this week, they've either been laggards and they've done absolutely nothing, and we'll probably see some selling in them if the market does retrace, or they've gone parabolic in many cases and you can't even touch them. So I wanted to find something that's got a nice balance to it, has a decent support level that we can lean on, and Texas Instruments fits that bill. So you can see we had a horizontal breakout right here, long green candle closing on its high through the 200-day moving average. That's nice. So the stock runs up, and now it comes back and it tests this 200-day moving average. One, aha, now it can't quite get down to the 200-day moving average. 2, 3, 4, 5, 6, tails under body. This is a sign that there's really nice support. So if we tuck in underneath this 200-day moving average right in here, we should be able to sell a really nice bullish put spread. I'm thinking somewhere around the 119 level. You can see right there that the high and the close were 119.40, so that should be the support level. If we go down to 119, we should be just underneath that, give ourselves a nice little trade. So we're going to go out and we're going to take a look at the July 10 expiration. And we're going to go down to the 119 strike price. And so we would be selling, which incidentally, when you're using option stalker and you bring up the option chain, all of these lines have significance. This is a one standard deviation move, the red dotted line. That's the 200-day moving average. You can see it there. The blue line is two standard deviations, so we'll be two standard deviations away. And then the black line is the 100-day moving average. So when you're looking at the chain and you see these lines, you should be thinking, aha, I probably want to sell below these lines if I'm a premium seller. So I'm going to click on the 119 strike price and I'm going to click on the 118 strike price. You know that because there's $1 between the bid ask, I would normally be looking to bring in a 20-cent credit. These options expire a week from Friday, so there's very little time in them. And so I'm going to pull this down and I'm going to be taking a smaller credit. I'm happy with a 15-cent credit on this one because we only have to wait a week. And if that expires worthless, we're going to be making somewhere in the neighborhood of 18, 19% return on the capital that we have up. And Monday should be pretty much a non-event. Like I said, kind of a hangover. And we've got earnings coming up, so I think the market's going to be with us. We're going to have a nice little tailwind. I like this trade. So to recap, we're going to be selling the TXN July 10 119 put, and we're going to be buying a 118 put, and we're looking to do that for a 15-cent credit. And I'll mark good till cancel. This is already in the staged order entry screen. And so if we don't get filled on this trade tomorrow, Thursday, I do not want to do the trade because that would mean that when we come back in next Monday, the stock will have pulled back pretty considerably because we should have seen some time decay over a 3-day weekend. And that would mean that the stock would really be pulling back pretty hard. So this is kind of we get it done Thursday or we're going to move on. And that's how we have to trade on our terms right now. We have to be relatively cautious because the market conditions are uncertain. This is a low probability trading environment from my perspective. So Texas Instruments is the second trade that we're looking to get off. The third one you're going to be pretty familiar with. Walmart. Walmart, don't we already have a Walmart spread on? Oh yeah, we're short the 117s, we're long the 116s. They expire tomorrow, and that's why I want to roll into another spread. On this one, we're going to have to go out to July 17th, and I'll show you the spread that I'm looking at there. We're going to be trying to do exactly the same thing, and we're going to be selling that 117 put and buying the 116 put. And here we're going to be looking to do this for a 20-cent credit. And you can see that that spread is a penny bid offered at 43 cents. So we're going to be pretty much in the middle on this one. But this one will keep alive even into next week because we're looking at a July 17th expiration. So let's go back and take a look at Walmart one more time, and we'll see what it is that makes us so interested in this. First of all, Walmart did really, really well during the coronavirus, and if the spread starts to really come to life, I believe this is a flight to safety stock. So even though it was in a downtrend and now it's flatlining, it's not going anywhere fast, but it's got really decent support. We've got the 200-day moving average that's holding 1, 2, 3, 4, 5, 6, 7 tests of this 117 level. That support is very, very solid. So I feel comfortable going out, and you can see here that earnings are not until August 20th, so we don't have to worry about earnings. If we came in and we found out that more states are starting to shut down and that businesses are starting to shut down because of the virus, I think Walmart is a benefactor of all that type of news. It's a flight to safety stock. And if we don't get that kind of news and the market just kind of flounders around and maybe moves a little bit higher, I think Walmart holds its bid in that environment too. So we're just looking for nice conservative option trades. And so to reiterate, that is a July 17th 117 put that we're selling, and we're buying the 116 put, and we're doing that for a 20-cent credit. That would represent a 25% return in a little more than 2 weeks. We haven't had a losing trade since the middle of February, and we got into that trade, and that was a Disney trade that we're selling an out of money bullish put spread on, and we reeled it right back in a couple of hours later. But since then, we have been on fire. Now we've got a little bit of work to do on CHWY. I think that stock is going to work out for us. I really do. So that's the next spread that we've got. And then our final spread, I'm going to go into a search that I really like using. And you can see buy into earnings. Well, what the heck is buy into earnings? I've gone back and I've calculated statistically what stocks do ahead of the earnings announcements. And over the course of the last 3 years, these stocks have rallied when they are inside of that 2-week window before the earnings announcement more than 75% of the time. So let me repeat that. These stocks in this buy into earnings search, they will be reporting in 2 weeks or less, and 75% of the time or more over the course of the last 3 years, they have rallied into the earnings announcement. Huh. That is a very statistically significant number. Does that mean that we go out and buy calls on these? Not from my perspective, because we don't have a go-go gangbuster market right now. And I feel that selling out of the money bullish put spreads is still the way to go. So if the stock doesn't rally into the number, let's say it just stays dead flat, that's still okay for us. So the stock that I really liked, and you can take a look at all of these yourself in Option Stalker, and over the course of the next 2 weeks, when you come in Monday, you're going to see more stocks in here. And Tuesday and Wednesday, you'll see even more stocks. Eventually, this is going to be a very, very long list. And then you may want to add another filter to it, like on a buy signal for a D1 basis or something. Yeah, you can use a buy signal on D1, H2, H1, all of those, or you can mark all of them. Then you at least know that it's on a buy signal because you'll have to start filtering out some of these stocks. But you know that you have a very high degree of probability that buyers tend to like these stocks into the number. Well, the one that I had selected was IBM, and I'll show you why. It is below the 100-day moving average, but it has really decent horizontal support right here. And I like that tail right there. I like that tail right there. Right around that 120, well, 112 level, we're starting to see some really good support. But I need to go just a little bit higher on this one because we're going to be selling an option that is expiring on July 10th. So I'm going to lean on that opening there and that opening there. And you can see how when it tested right there, there was support above that level. Let me use the crosshair. So if I'm looking at that support level there, support, support, actually above that support, stock drifting higher little by little. So I want to lean on that 113.90 level. Let's call it 114. And what we're going to be doing is we're going to be selling an out of the money bullish put spread on IBM, and we're going to be using that 113 strike price. And so I'm going to click on the 113 and I'm going to click on the 112. Now, normally, you know here that I've got zero bid off screen because the option bid ask spreads are wide, offered at not quite 30 cents. It's a 27-cent offer. We're going to be trying to middle that. So we're going to be looking to get a 17-cent credit. So I'm going to adjust this price right here, and then we'll go over the trade again. 17 cents is a little bit less than what I would normally look to get for this spread, but we're only going to have a week and a day for this spread. In terms of risk exposure, and I'm going to hover over the earnings date, and you can see they announce earnings on July 15th. Well, July 10th is the only expiration that I can use because I want to make sure that those options expire before that earnings announcement. So I did not have another expiration to choose from, and that's perfectly fine. So to go back over that trade again, we're going to be selling the IBM July 10th 113 put. We're going to be buying the IBM July 10th 112 put. So $1 between the strike prices. We're going to be looking for a credit of 17 cents. If we can't get this trade done tomorrow, we're going to cancel it. So there are two trades that we're trying to use for the July 10th expiration. They are IBM and they are TXN. If you are not filled tomorrow, Thursday, July 2nd, by the close, cancel those trades. We're done with them. If we didn't get them off, we didn't get them off. The other two trades, Baidu and Walmart, those have a July 17th expiration, and we're going to continue to work those orders until the video next week or until I send you an email saying we don't want to be working those trades any longer. So I'm going to recap something very quickly, which is the market. So what are we expecting this market to do again? We've got this downward sloping trend line on the S&P 500 that's been breached to the upside. That's good news. We've tested this 200-day moving average twice now, and they've been multiple tests within each one of these, so that's also good news. Nice firm support there. We know that there's an upward bias heading into earnings season, so we have that tailwind working in our favor as well. We know that there's going to be pre-holiday trading. The trading volume is going to be very light right now. That's going to be An after effect Monday will have that hangover, so we can expect some pretty dull action over the course of the next 2, 3 days at least, and that might even linger into earnings season. So we're just trying to generate some income right now. That's the game plan. And then as earnings season starts to unfold, we're going to have a lot more trades that we'll be taking a look at. Some of them we'll get from this buy into earnings search. Some of them we'll be getting from the strong after earnings search. And you could take a look at a couple of stocks that came up right there. DRI recently announced that's a restaurant stock with the coronavirus spreading. I don't like it. RAD's been another one. Too choppy. I don't like it. But it's that easy to just filter them out. Give it a look. If you're a swing trader, you come home at night, look at the searches. Pop Bull is obviously one that you would really want to take a close look at if you're doing end of day analysis. This is one of my favorite swing trading searches to use. And if you take a look down this list, you're going to see some really, really nice ones. But you're also going to see some stocks that have kind of gone parabolic. So I think it's time to really avoid those and to really look for consistency in here. That's all I've got for you tonight. If you're watching this video on YouTube, I put it out to my members on Wednesday nights so that they have a chance to get in on those trades. And then I release it to YouTube, usually Saturday mornings. This week I'm going to release it to YouTube on July 3rd, so you'll be able to take a look at the analysis and get familiar with it. Take a look at these stocks and see how they perform. Then I think you'll get a feel for how good the research is. If you like the content, please give it a thumbs up. Please make sure to subscribe to my YouTube channel and turn on your notifications so that you never miss these trades. Thanks, everyone. I hope you have a great holiday. Please be safe as you celebrate the birth of the greatest nation on the face of the planet. Thank you so much. Have a great holiday. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.